Good morning. Thank you once again for joining us. It is Monday, November 30th, and we are here for another episode of the ALG Weekly. As we do every week, we come to you with community leaders. We come to you with people who have resources to offer to the community, who are expressing their field and talk to us about what it is they're working on and what it is or how it is that they can help our community and help us serve our community better. So this is another Monday, and we have another one of those community leaders and experts in their field. And today I will be coming to you with
Yusuf Muhammad here. I'm a financial advisor. But let me tell you a little bit about myself, I suppose, right?
Yeah.
So I've been here in Colorado since 1998, originally a refugee from Somalia. And, I just love being in this state. The state has been nice to me and has given me opportunities that I was able to take advantage of, and I've stuck around. But beyond that, I'm really grateful to be here at the ALG with Amadou here and Professor Madiama, and grateful to be able to talk about financial planning and what it means to invest, to take advantage of some of the great tools and ways that you can build wealth. And
thank you for joining us to talk about wealth and financial planning. It is November 30th, only a couple of days, 31 days to be exact, left in the year. Mm-hmm. So I guess now is a good moment to start thinking about financial planning and start thinking about the future. Yeah. But before we get there, as you know, here at the African Leadership Group, we strive to help African immigrants to integrate professionally, and it seems as if you have done that by yourself perfectly well. Mm-hmm. How was the transition from coming to the U.S. as a refugee to integrating to the country and going to school and now being a financial advisor?
Yeah, you ask a great question, Amadou. So I definitely would say I did not do it alone, but I like that you believe in me. Hey, I definitely like that, and thank you for saying that, but I did not do it alone. I came here in 98. I came here fairly young, so it was easy to integrate into the country, go to school and try to adapt into a new way of life and culture, right? So I was fairly young. I was in 5th grade when I came here and learned English. I knew maybe how to count to 10 and watch Barney enough, Sesame Street, and listen to my teachers. And I was able to learn the language. And then from there, I wanted to do good for myself, for my family. I knew what was at stake. We weren't afforded the same opportunity, so I didn't want to squander an opportunity to be a better person for myself, my family. And I wasn't the best student, but I did care and I did want to learn. But as you get older, people misguide you, or you think somebody's well-intentioned and then you may be led astray, right? But you eventually figure it out, right? You have to figure out, and thankfully I was able to figure that out. And really, once I was a sophomore in high school, I just worked. I worked since I was 15 years old, and I've been working since then. And I remember at my peak, I had 3 jobs, and I was a senior in high school, and 3 different jobs. But that was really it for me to be able to, once I realized what's important and what really mattered, I just focused on my family and my education, and then went to the University of Colorado in Denver. And initially I was interested in studying pre-med, like all African parents.
Yeah, that was gonna be my question. I'm like, how did you get into finance? Usually, if you're not a lawyer, you gotta be a doctor.
Exactly. It was the typical thing, find a profession, doctor, dentistry, lawyer, some sort of professional kind of a job. And I was initially pre-med biology, and then, of course, as I was working, I found the people at the bank, they liked me. I was going there since I was 15, so I needed a job to, pay for my school and housing. So I became a bank teller at a Fortune 100 bank, and I liked it. I like dealing with people. I like dealing with money, and I was able to do well on the role, and I realized, hey, this may be my calling. So by no means did I mean to be in finance, but I got in it, I liked it, and I changed my degree to finance. And let go of pre-med. And I still remember some of my family members saying to me, hey, are you sure? There's not a lot of people that are in finance that have your background. Find a profession and stick to that, right? Yeah. So, but I knew what I was good at, and I knew what I liked, and I stuck to it. And 15 years later, I worked up through the corporate ladder, and I changed firms to another Fortune 100 firm that they mainly do retirement planning, investment management, and for me, it was purely to learn what was more complex, and in essence, for me, I didn't care about the money per se. I was still making a decent living, but it was just really to get better at my craft, to get more knowledge, and that's why I went to this other firm. And so I was 10 years at the bank, and then 5 years at the bank, and 10 years at the investment company, and I learned a great wealth of information there, and that was more or less my transition over time. And by no means was I idle, right? You work, and I still had an entrepreneurial side to myself, and I remember trying to wholesale hats, fedoras, and shoes from China, and see how that goes. Of course, what I was really good at was this, so I just eventually just stuck to that.
Yeah. So eventually you find what it is that you're good at, and also what it is that you like doing. So if you can, if you're lucky enough to find the combination of those two things, I guess you've found your work.
Definitely. Earlier you said you did it by yourself. I didn't do it by myself by no means. But I remember Papa. So Papa, the founder of ALG and the leader here. So when I was a bank teller, he had taken me out for lunch, and he said, he got to know me a little bit, and I didn't know how to tie a tie really, so I would have my coworkers tie a tie for me. So he got to find out who I was, but at least, he knew that I cared, and he believed in my abilities in this industry. So he pulled me aside and gave me some wise words on how I can, carry myself day to day, my professionalism, and just things that I didn't know as an 18-year-old coming into this industry where it's adults that you're dealing with people's money. So it really, there was people like Papa and the wisdom that they shared with me that I was able to apply and take that feedback, right? Not simply say, okay, and then just leave it alone, right? Actually take that feedback and implement it. So that was important, and that was invaluable advice again that I was able to apply to my life, to my profession, and that went a long way. So,
all right, let's get into it. It is the end of November. We are officially into the holiday season.
Yeah,
which is pending time for a lot of people. Let me retract a little bit, right? Because most of our community members, when we come to the United States, it is a financial system that we are not used to, right? So there's a credit system. Now all of a sudden you have money that doesn't really belong to you, but is available to you, that you have. The education, is there an instance where you have dealt with immigrants, whether it's African or not, but there's not a lot of countries have a credit system like the United States.
Yeah.
So when people are going through that transition, what have you found really seems to be hard as far as education goes and the understanding of how to use those financial tools?
Yeah. So you're right. It's a totally different system. You have the credit system, then you have the savings, and then you have the investment. And within all of that, there are different rules, right? And ways of reaching those goals, right? So with the credit system, it's complicated. If you're a business owner, if you're just a person that's just looking to get credit, how do you build credit? One, secondly, how do you maintain that and grow it? And then how do you leverage it appropriately so that way you're taking advantage of the system that you're able to access capital, access money. So I think the biggest thing that you could do is talk to, a local banker that you deal with at your local bank, right? Because a lot of times when you're getting lending, you start with your local bank. But beyond that, finding other methods of learn from that banker, but you don't always have to be stuck with that one bank, right? Because some of the banks, they're really out for themselves, and it's purely, hey, this is how much money we can make off of each person, and we'll give you that lending, but it may not be to your best terms. So it's important to build credit, maintain it, and leverage it appropriately, and then always make sure that you're paying on your debt, right? Your monthly payment, the minimums, right? A minimum, pay that minimum, but also don't be a slave to debt,
Yep.
where you're never gonna able to see the other side of this.
Yep. And
being paid off.
Right, I think there will be some people watching us who'd probably be, what is credit, who are still struggling to build credit, or just trying to have a basic understanding of what credit itself entails, right? And so on a very basic approach, how would you explain credit and the importance that it has in this country, especially for immigrants who are not used to the system?
Yeah. So on a very basic level, how do you explain credit, right? So, and I guess I'll take the example of myself, and then also some people that I've worked with over the many years, when I was in the bank, when I was a banker, when I was doing lending, when I was a loan officer at the bank. So, at the very basic level, it starts off with getting a credit card, right? That's the first step to it. And that credit card sometimes will be a very unfavorable term. I remember when I first applied for credit, the bank that I worked for didn't approve me. They declined me. So I went to a different company. It was Capital One. Capital One approved me for a credit card, I remember. So it was like 21% interest, $500 limit. But that was the starting point, right? So I proved myself by, I used it and then I paid on it monthly. And then I showed that I can consistently pay the bill on time. They don't really care that you took on debt and you paid it off immediately, right? Sometimes there's this, okay, yeah, so I'll take $500, I'll use the $500 and I'll pay it the next month. It doesn't show that you're able to consistently maintain a habit of paying your bills, right? Consistently, that debt. More or less, that was my starting point. Capital One, very horrible interest rate. It never changed, really. It was always about 20% or so. And then a year later, I applied for my bank that I worked at, and then they approved me, and it was like, I think 9% interest. So there's a big difference there, right? But the idea was for me to build the credit and start off somewhere, maintain that credit, and the idea is, again, don't use that money as, hey, I've got this money, I'm gonna go spend, Do it methodically, do it with purpose. And my end goal was to build credit, to use that credit when it was appropriate, and ultimately have a credit score. Again, you're measured on this score. It goes off of your credit history, how long you've had credit, have you paid it on time, what's on that credit, what's your debt to income, meaning, all right, so you have an income of, let's say, $1,000 a month. Do you have $500 a month going to debt, or do you have $100 going to debt, right? So if you had $1,000 monthly income and $500 going to pay monthly debt like credit card and car loan, then it would be 50% of your money is going to debt. Well, how are you going to pay for your groceries? How are you going to pay for your rent for the place that you're living in? Utilities, miscellaneous spending. So that wouldn't look good if you had 50% credit debt to income ratio, right? And on the flip side, if you had 20, 30%, okay, well, this guy is maintaining a good level, and those are the things that they look at. The anybody that's starting off, a new immigrant that's starting off, they won't have a whole lot of credit history. You're getting the card this year, and you only have 1 year of credit history. But eventually, as time goes on, it will get more complex. You'll get more history. And I remember even after 5 years of having a credit card, it was still not good enough. I remember when I applied to buy a house, they said, oh, you don't have long enough credit history. Well, they're looking at people that have been here for years that have 40, 30 years of credit history, compared to myself where, I just became an adult and I've had maybe 5 years. But over time, again, we're going to live, if we're lucky, and chances are majority of us will live a pretty long life, you will have that history built over time, and you'll have more complexities. But it's simply maintaining that and keeping track of it.
Yeah, yeah. And I guess I started with the credit point because not only does it help you build credit, but you become more responsible knowing that there is a system that's going to hold you responsible, right?
Absolutely.
So, but before we get into wealth management, I think for a lot of people, credit may be, the first wake up call of, hey, you actually have to take care of yourself and know how you're spending and pay attention to what you're spending before people actually start thinking of, hey, I need to start saving, I need to start doing this. But with the upcoming holidays and it's spending time, I think according to Credit Karma last year, about 27% of Americans took on debt for at least $500
During the holidays.
During the holiday seasons. What's the advice, or how should people think about spending during the holidays, and how should people go about that?
Yeah, you ask a good question there. So I will go back to one thing that you said. I think you made a good point. For most of us, we're coming in to this country, or just in general, just without a whole lot of resources, not a whole lot of wealth or savings, so we're building from scratch. But credit is one great way to leverage to be able to build wealth, right? So if you think of being able to buy a house at a reasonable interest rate, and one getting qualified to buy the house, it's going to involve credit. And one of the biggest assets, one of the biggest wealth builders is houses. In the long term, and again, historically speaking, that's where most Americans' wealth is tied to. It's their houses. But it affords you to not be tied to a landlord that's going to increase their rent every month, or every 6 months or a year. Hey, it's going to be $50 more, $100 more. And where's the end, right? As to where a house, you have ownership in it, you're able to build equity. And again, historically speaking, if all things go well, which again, if you're doing it long term, you're going to have a lot of wealth tied to your house and a lot of equity. And then that equity you can leverage to buying into a business. You're going to be able to refinance, do a cash out refinance, or home equity loan or line. And you're able to leverage into other things, right? Beyond just that house. And so that's important that you bring up. Being able to use credit wisely is the starting point to being able to get to those other points in your life. And to your question, you said, how do you spend wisely? Yeah. I suppose, right?
Yes.
During the holiday season.
Holiday season.
Yeah, and it's a tough question to answer, right? Because everybody has their own desires. People do it for different reasons when they spend, but I think there's this idea that there's deals to be had during the holiday season, and there are some deals to be had, but it's nothing that is, in my perspective anyways, my personal opinion.
So I guess
that's extraordinary, right?
Right. I guess then I should probably rephrase the question to how should we, or what are the methods that we can use so that we don't overspend ourselves, right? During the holidays, I think, as you said, people may spend for different reasons, but everybody is scared of overspending or getting into debt, and that they won't be able to pay, or that they ultimately will have to pay interest on, because that's added to
definitely
their monthly utilities and bills.
Yeah. So I think of if you're gonna spend on during the holiday season for whatever purpose, right? I think of following a budget. In your household, you should have a budget that you're able to follow consistently month over month. And then within that budget, during the holiday season, well, do you have extra money coming in? Sometimes companies will give you extra pay. And then you have access to capital, you have access to credit. But whatever that you're buying, what is, really thinking about what's the goal? What is that going to serve for you in the long run? And also there's consequences if you spend too much, right? You have this bill that you have to pay. You might fall behind on another bill possibly. I remember one year, my senior year in high school, I lived on my own, and I wanted to celebrate. I bought myself shoes. I bought myself a new outfit for my graduation. And then, the first of the month came, I had to pay my bill. I wrote a check and I paid it. And then, a week goes by and I find out I have 11 overdraft fees. At the time, these banks were notorious for charging overdraft fees, and each of them was $33. So 11 of them, that was all of a sudden $360 some in fees that I had. So if I know it's nice it's good to feel, I guess, yeah, it's good to feel good, right? Me buying, a new clothes and shoes, I wanted to celebrate, I want to take care of myself. I did that, but there was a consequence. I didn't plan for all the other bills that I did have to pay, and all of a sudden I had a lot of overdraft fees. Mm-hmm. So I think if you just keep that in mind, that would be it. And a good rule of thumb is if you're meeting all of your other obligations and you have excess reserves and you're able to spend or use credit and make those monthly payments, then by all means do it. But have you met all your other obligations?
All the obligations.
And once you have met those obligations, then go ahead and maybe treat yourself.
Yes, and right? I think probably, or maybe the only way of knowing that you'll be able to meet all those obligations would probably be implementing a budget, right?
Absolutely.
So how if you're talking to me and I've never implemented a budget in my life, I've never had a budget, mm-hmm. and I'm probably somebody who lives from paycheck to paycheck. Mm-hmm. How would you go about helping me implement, not only helping me implement a budget, but also helping me understand the importance of a budget and how that can help me on the long run?
Yeah. So the importance of a budget. So it's a way for you to get out of living paycheck to paycheck, in all honesty. You know what's coming in, you know what your fixed expenses are, and you're able to put that in pen to paper. And you don't have to necessarily do it the first 2 months. Maybe you could just look at how you have spent money without a budget, without you following a budget, mm-hmm. by simply, okay, last month this is what I did, and the last 2 months this is what I did. For September, this is how I spent my money. For October, this is how I spent my money. All right, and I write out, this is the fixed expenses. My rent is fixed. My trash bill, my utilities may be fixed to some degree, right? And then you write out the things that are variable. Also, your car loan may be fixed. Mm-hmm. Your credit card bill may be a fixed amount.
Car insurance.
And then you write out the variable amounts, the things that will adjust month to month. And then, for the November month, you set up, hey, this is how much I'm going to spend on food. This is how much I'm going to spend on my clothes, going out to, eat, going out to enjoy friends and family and, whatever it may be, right? So you write all those things out, and this is the dollar amounts that I'll spend. And also, we have families that we may be supporting in Africa. Sometimes I will have family just say, hey, I need this much money. I'm like, well, there's not money just floating around everywhere in America, as we may have thought when I was there as a child. But what I'm saying is, like, hey, you have that budget that you're following, and calculated in there is whatever your expenses are, expenditures. And then you'll find, okay, well, I'm using my money without a whole lot of thought of where it's going to and how much am I paying myself, right? Mm-hmm. How much am I putting into my savings? Mm-hmm. I'm paying the government X dollar amount. I'm paying the landlord this much, or the mortgage company this much, right? But how much am I saving for myself? And also, am I treating myself the things that I do really enjoy, if it's traveling or a certain activity or hobby, or having a gym or some sort of thing that gives you joy or that makes you better, whether it's education, athletics, leisure, travel. You have all that calculated in there, and you'll have aha moments as if you do the budget. If you follow the budget, you'll have aha moments, and you'll find ways that you can be more efficient. You'll find ways that you can save more, or simply you can spend money diverted from one pool or activity to another that may be more significant or important to you. So that's I think the significance of a budget. Again, I think I consider one of the foundation, one of the layers, the very beginning of a good financial plan or a good personal finance management is being able to manage and maintain your credit so that you can appropriately leverage. And then second is a budget, and the third piece is insurance, which you're able to pay for insurance so you can have protection against unfortunate or very expensive things, right? Health care, car accidents, right? If you have a car and you get in a car wreck and somebody's hurt, it can bring you down significantly, in your finances, or also if you're not able to work, disability insurance,
your house insurance,
those things. Yeah, those are the basic layers, and then you get more complex as time goes on, as you find, okay, well, I'm earning more money, I've managed my debt, I'm able to leverage appropriately so that I can get the house that I want at a very favorable interest rate, and what have you. So, and then once you have that solid foundation, then you add on to it, and that's where other things come in, right?
And I think you kind of went into my next segue, which was going to be insurance, right? Especially because, this is America. It's a developed country, but most of us who come even from third world countries, insurance is something that most of us had never had to deal with, right?
Yeah.
Our countries are known or renowned to be poor and not have as many resources, but we're in places where it is accessible. It's things like insurance is way more affordable than it is, right? And for a lot of people may have never had to think about, paying your home insurance or life insurance. I think as far as you went to probably medical insurance or paying your car insurance, and a lot of people don't even have the financial freedom to afford the car. So how for our communities who may be new to the insurance and the system of that itself, and oftentimes we are skeptical of the system that we don't understand, right?
Yeah.
So
that's true. What you said is true. It's a system that you don't understand, and you have questions. You're skeptical because it's foreign and you don't understand it. And where's the money going to?
Exactly. So if there's somebody who's watching us and is probably skeptical about the system of insurance and is probably questioning the importance of it, or where's the money going to, how is that going to be used, what advice can you give to those people?
Yeah. So it is, again, another complicated thing, right? Insurance, you're dealing with all kinds of insurance, right? You have disability insurance, you have auto insurance. Within the auto insurance space, there's different levels of coverage you get, right? And then depending on the car, you may need a specific kind of insurance. If you have a brand new car, you have a debt on, right? You have $30,000 debt on it. If anything happens to you, you're still responsible for that $30,000 debt. If the car's got in a wreck and the engine's no good, you're still responsible for that debt. So you have to have appropriate level of coverage. And same thing with health insurance, same thing with life insurance. But the idea of insurance is you pay a very nominal fee for a significant coverage in case a worst case scenario happened. And you'll be surprised how many families have lifelong liability because they didn't have the proper coverage, or they didn't have any coverage at all. Somebody did hit me a few years ago. I think it was 2015. Somebody had hit my car, T-boned it, and I was luckily fine. My car was totaled, and they didn't have insurance. The insurance company, I did have proper coverage where the car was totaled, but it was paid off because my insurance, I was covered for that car. But that family, that insurance company was going after them all these years, to this day. And I think recently they said, hey, we resolved it and we were able to get some money. They settled with some, paying off some of the liability for what had occurred. But if you think about it, you're not talking about a few $100s, you're talking about thousands of dollars, sometimes tens of thousands of dollars. If you include in medical and all that stuff, you'd be talking about hundreds of thousands of dollars. So by paying this nominal fee, you're able to avoid a liability that can haunt you for the rest of your life, and you're not going to be able to be your best financially, and you're not going to be able to be your best for your families financially, right? So it's a thing that, again, it's a layer. It's one of the biggest layers of a financial plan is having proper coverage, proper insurance coverage, mainly because of that. And then if you talk about medical, you know, if you have something unfortunate that happens to you that causes you know, $100,000 medical bill, you know, how are you going to pay that? And unfortunately, it will again just haunt for life, and you won't to a financial freedom, and unfortunately, you know, you may have to work all of your life because of that, right? Or maybe may just give up, just simply, hey, my wages are garnished, I don't care, I give up, you know? Exactly. And you don't want that either, right? So,
And I think we've covered the basics, the credit, the budget, the insurance. So I think now probably the next level that be appropriate would probably be savings, right? If you've sorted out a budget, you're working on your credit score, you have insurance in case something happens to you. Now you're probably thinking about saving. Right. So and I think part of saving would also be included into budget, but
it would be. It would be.
Right. It would be, but beyond the budget, what are the other opportunities people could find of saving?
Well, so, you know, I think of, we all have responsibility. We all have a family to be responsible to, and I think we've all ridden airplanes. So when you get on the airplane, you know, the flight attendant comes over. Hey, this is how you buckle your belt, and they explain to you the oxygen mask. When things get really bad, make sure that you put on an oxygen mask before your children. Well, you know, in some ways, like, well, no, my children are very important to me. I would rather have them be well and safe and breathing. You know, it may make sense to do that first, to give them the oxygen than yourself, right? But no, really, there's a reason why. Because if you're at your best and you're breathing, you'll be able to make sure that they're breathing, right? That they're getting the proper oxygen, that they can survive this, you know, whatever scenario it is in this flight, right? On a worst case scenario. I consider in personal finance the same way. If you yourself are doing well and you're able to handle your affairs, you're able to properly save for yourself, then you're going to be able to take care of your family, you're going to be able to take care of your children and the people that are important to you. So apply that same idea to saving, to your own personal budget, to building a financial plan. Make sure that you're giving yourself that oxygen first, so that way you can give your family, you know, that oxygen mask. And saving is if you have done, you know, those things, right? The budget, you have credit, you're building on your credit, you're maintaining it, and then you have the proper insurance in place that you're paying a nominal fee for a significant coverage in case of a worst case scenario. Then you know, again, within that whole thing, that foundation is having 6 months. Usually they say 3 to 9 months of emergency savings. So if worst came to worst, you couldn't work, then you can pay at least 3 months of your bills at the very minimum. Ideally 6 months, even I would say, depending on the industry that you're in, how quickly you can find work, how old you are, even 9 months to a year of emergency savings that you can say, okay, so I have this much in expenses every month, so I need 3 times that for 3 months of it, or 6 months, or 9 months, right? And that will afford you the time, if something bad happened, to be able to find the next job, the next source of income. And all of a sudden you're not being evicted, you're not possibly in foreclosure, you're not having your electricity cut off because of not being able to pay it, right? Or you're not having to tap into your unfavorable credit terms, right? Credit that's, okay, I've used all of my favorable credit terms, now I have to use this card with 25% interest rate. You can avoid that. Or having to tap into your retirement assets, where the IRS charges you a 10% penalty if you withdrew from a retirement account before you're at a retirement age, right? And so you can avoid all these different penalties, significant penalties, unfavorable consequences by, you know, having a proper savings. And again, that gives you that foundation, that strong foundation to be able to build on it.
And is there, I understand that, and budgeting is especially hard for immigrants because, not only do we have to take care of ourselves here, but most of us still have to support family members back home. But is there an ideally speaking, is there a percentage of your income that you should be saving, or a percentage that you should strive maybe to be saving, even though depending on situations it may be hard, but is there ideally speaking a percentage of your income that should be going to savings?
Yeah. So, again, all the things that I'm saying to you, they're all in general terms, right? It's just purely for education. Each person is unique, right? Your personal situation is different than myself or other families, right? Our family dynamics are different. Our profession, our goals, desires are different. So, and, with that in mind, though, some have say, hey, 10% at minimum, at the very minimum, put 10% away for savings. I really would say 20% would be ideal. And again, depending on your circumstance, you may be able to do more, or maybe you have to do a little, less than that. That's all you can do, right? But in all honesty, if you can do 20%, that would be very ideal. In that 20% would be what would be for emergency savings, right? 3 to 9 months of emergency savings. And then beyond that, once you have hit that goal, then you're putting money away for, okay, well, in a year's time, I like to do this. I like to travel back to Africa, right? You can save for that. In 10 years' time, I like to open up my own business, and then you have a set of money that you can put away for that. And then you have a set of money that's long-term, that's retirement. All right, well, I am 30 years old, and I want to retire when I'm 60 years old. And I'm going to put away X dollar amount into my 401k, into my IRAs. And again, depending on your circumstance, some may be more advantageous than others. And finding that appropriate, the most efficient way of saving for those long-term investments, right? And investing it appropriately, right? You have a bank that's paying you very little interest or income. You can consider other investments that are more long-term, that meet your risk level, risk tolerance level, and investment goals.
And I think even in some ways, the emergency saving could be seen as an insurance that you're insuring yourself, right?
Yes.
You won't use it until something happens, and you're living, you're striving for that thing not to happen, but you're still saving for it, just in case.
And it's there at the bank. It's easily accessible, right? It's in something that's very safe, something that's easily accessible. You wouldn't want to put your emergency savings into a stock, right? If the stock is down 20%, that means, if you had an emergency, you sold that stock, and then all of a sudden you're selling at a 20% loss. That's not good, right? So that emergency savings should be purely, cash that you can access. Whether it's in any other liquid, safe investment, it doesn't matter as long as it's that easily accessible. But so, you bring up a good point, though. But there's method. If you have different goals in your life that you want to be able to meet, saving for each of those appropriately, and making sure that what would be for retirement is not just in a savings account or a checking account, that it's really, you're getting the most tax efficient investments and account, right? Whether it's a Roth IRA, traditional IRA, 401k, 403b, your employer has maybe a pension or some sort of retirement plan that they're maximizing on that. And saving, I really consider it more than just what you put in the bank. It's what you're gonna need for the short term in case of emergency, medium term, and what you're gonna need long term, which is retirement.
Right. So and then after savings, then we probably talk about investment and retirement. But at what point would it be? At what point would it be? I think best for somebody who's going through all the things that we just talked about, somebody who's new and just building their credit, budget, insurance, talking about saving. At what point would you introduce the idea of investment and retirement to those people?
Yeah, I love that question, and I love that question because getting started early excites me. I have cousins that, one of my cousins, I literally talked to him last week, and I told him, hey, you're 20 years old now. Do you know the difference between starting to invest now and save now compared to if you were 30 years old? So we did the math, and I think we did something along the lines of, if we had, I think, a 9% return on the investment, he invested, I believe it was, he said he could afford $300 or something like that. I said, okay, $300 a month. He lives with his mom, and what debt do you have? What bills do you have? But if you're putting away that much money, let's say hypothetically, and you invested until you're, in this case we said 30 years, right?
Mm-hmm.
If he's 50 years old, okay? That difference between investing when you're 20, starting to invest when you're 20, to when you're 30, was something like $400,000 in that time period. So the sooner that you start, the better. When should you have these conversations with, yourself, with your family? Now. Even with your children, talk to them about that and the significance of it. Because we're going to work. We're going to always work. We're always going to deal with money, whether we're in finance, whether we're in nonprofits, entrepreneurial, a doctor, a politician, anything. What we do it because we want to provide for our family, sustain ourselves, and in this case, the bottom line, money. So, and the sooner the better. And that 10-year difference between starting when you're 20 years old to when you're 30, I'm not kidding, it was a $400,000 difference between that 10-year span.
Yeah, and because it's 10 years and also compounding interest.
There you go. The compounding of interest, the time value of money, that 10 years was able to afford that money to double in essence. I think it was like $300-some thousand that it would be if he was 30 years old to 50 years old, compared to if he was 20 years old to 50 years old, it was like $750,000.
Yeah, and I think you brought up an interesting point, which is the value of money, right? Mm-hmm. And I think from our cultures, most of how we save money is you just put it somewhere in the household where you think it's safe, right? Mm-hmm. But we don't know that money is really losing value.
It is.
So how can you explain to someone that is not familiar, how come that money itself loses value?
Yeah. And we can look at the basic, right? The basic thing like milk and bread, right? So let's say you kept your money, your $2 in the house underneath your couch. There's that saying, right? Keep it under my couch or under my bed, right? Or in my bed. And you don't touch it, right? 10 years later, that bread and milk that may have costed, $1 now, 10 years from now, might cost $1.90, right? So all of a sudden it takes the $2 that you had from 10 years ago to buy that bread or milk, the entire $2 almost, right? Compared to, if you were able to put that money where it's working for you, right? And the way that it's working for you, if you're saving, if you're buying into a bond or into a stock, and again, quality stock, you can be very aggressive and buy companies that are very small, but there's a higher chance that they'll go under, right? But historically speaking, if you're looking at a big company, larger companies, there's demand for them, they have market share, and ideally they'll be around in the long run. But in essence, that money will be invested over that 10-year period, and instead of it being $2, maybe it's $4 now. Maybe it's $3, and now you have you spent $1.90 on the milk and bread, and then you still have $1.10 left because you're able to invest that money appropriately in something that would give you, a return for that money. So what you described is inflation, right? It's what you just described was inflation. What we're buying today is not going to remain at that same price.
Yes.
People will ideally earn more money over time, but we always know that things will cost more money over time. Yep. And again, historically speaking, that's where when you buy a house, there's going to be a scarcity of houses. There's going to be a higher cost to build a house than it is,
than it was 10, 20 years ago.
Exactly. So you have to calculate into all that. And to build a new house, it's $600,000 right now. And beyond all the confusion and risk that you're taking. But if you buy a house now, and then over time, that house will grow in value. And the same thing with money. And the money that's just idle, that's sitting there doing nothing for you, it's losing money every day. And again, the other thing, we talk about this in our schools, right? Opportunity cost.
Yep.
Yeah, the opportunity cost of doing X and the opportunity cost of doing Y. Okay, I can let it sit in my mattress. That's one. The other option is I can buy stock or put in some sort of vehicle that will give me some sort of return. Okay, this is the other option. And what are the costs of each, right? The money that you put into the stock market, there's still a cost. There's the risk of the money, you losing your money, right? But historically speaking, in the long run, if you're buying a quality company, they will grow in the long term, and it will outpace inflation and whatever the cost, the increase in goods, the increase in cost of goods, right? So keep that in mind, and yeah, that money that people have mastered this, where they understand, okay, if I do this consistently, I'm gonna financially be at a much better place by simply waiting, right? That gratification of, if I get this now, I'll feel happy, to waiting until later and feeling the gratification of, well, I can get what I want later on plus a few dollars more, right?
Yeah. And I think that opportunity cost, for me personally, just puts everything in perspective, because let's say I was calculating the opportunity cost of going to college a few years ago for a project that I did in class, and it's not just how much you're spending to go to school, but it's also the time that you're spending to study.
Yeah.
Right. So once you put all of that in, it's not just the books you're buying, the tuition you're paying, but also, if you go to school and you're spending 30 years a week, you're also losing the money that you could have got on those 30 hours a week, right?
Exactly.
And so opportunity cost, I think a lot of time just brings in that perspective and tells you, hey, either way, if I spend, there's still a cost, but on the long run, I may be better off. And even if I don't spend, that money is going to lose value anyways.
Yeah.
Over those 5 years, I think the cost of goods will go up.
Yeah.
And that money will lose. That money is just going to lose its value. And not only that, but it's also, if you're getting paid $15 an hour, $10 an hour, and you've spent the whole hour to get those $15, right? And so also on the long run, if you calculate in the time that was spent in getting that money, that's also going to go into the opportunity cost.
It would, absolutely. You make a very good point. And you can apply that to anything in life, in all honesty, the opportunity cost of doing X against Y, right?
The opportunity cost of being here
right now. Right, exactly, absolutely. You're right about that. The opportunity cost of us being here right now, and what are you going to get out of it? And with school, you bring up a great point, because again, the idea that education is a great equalizer, it's a good starting point with that conversation of education being very important. But I would rather have somebody that's curious, that's a life learner, than somebody that's just purely about just honed in on, I'm going to study my books and get my degrees, because
and I think that
you're afforded the realization to find a way to make a meaningful living for yourself, at the same time, be able to grow mentally, be creative in ways that you can, I guess, accrue resources, grow your business, or grow in a career, whatever it may be, right? So
and that brings in also another important point, because for years and years, we've been told that education is a great equalizer, right? But now that we talk about building wealth and managing that wealth, we see that even getting that education may actually, just because of that fact, it may make it harder for you to build wealth now, because of debt that people are getting, and people who are not able to pay their debt for 30 years, 50 years after going to school. Yeah. So for some, let's take the example of your cousin who's maybe thinking about going to college and is thinking also about wealth management. How would you factorize in the education and the cost of that on the long run and also factor that into the wealth, the building of wealth and its management.
Yeah. So, I think education is important, but it's sometimes not worth it, right? So if you have a person that goes to school, they take on this debt, $40,000, and then their salary is $30,000 when they get out. Well, what was the opportunity cost of not being able to work those times, right? Build a craft or a career of some sort in the meanwhile while you're doing this, and pay it off slowly as you're working and going to school. Or on the flip side of it is, could there have been a better field that they picked, right? That really does require education, and having the foresight to say, well, if I go this way, I'm going to end up here, maybe 30,000, 40,000. If I go this way, I'm going to be starting salary of 60, 70, 80,000, right? And making that decision in a way that, again, that's tactful, that you're putting some thought into it, because, again, cost of education has gone up 2-3 times to what inflation is. You're looking at education going up 8% a year on average, 9%, to what inflation is, maybe 2-3%.
Even this year, with everything that's been going on with the economy and the coronavirus pandemic, a lot of tuition have went up.
They really have. They have, and the schools are struggling because they have a lot of debt themselves, and they are not getting the same enrollment. The school, the board, room and board, the schools themselves are tied down because they have employees to pay, faculty that are, very good at what they do, and they're being compensated fairly or extravagantly, and debts to pay and bills to maintain and buildings to maintain, right? So it's a huge burden for this college student to take on those kind of things. It's important to get educated, and I think it does go far. It does go very far in the long run, but being tactful in the way that you approach what you're going to study and what you're going to pick. And could you find other ways to get to your ultimate goal, right? So what is the destination, and how can you get there besides that one option, which is, let's say, education, right? Could you do a combination of things, right? So, and it's possible, and on the same note, education is very important, but by no means is that the end-all be-all.
The end-all be-all.
Yeah.
Yes.
Yeah.
Thank you. This has been amazing. I do have a last question, though.
Yeah.
Now, clearly, a lot of people, not only immigrants who come here not at a young age, but even those who come here at a young age, a lot of this financial education and financial understanding is not provided within our education system, right? So how can we, as a community, make sure that education is provided within our community, in each of our families, and at a very early age, so that those kids are able to have an understanding and be able to make those decisions by themselves, and effectively calculate the cost and the opportunity cost of whatever decision or whatever field they decide to go in.
Yeah, I think it's important to start early. So for me, one of the eye-opening moments as a child was when I was a junior in high school, and a program called Junior Achievements had presented at my school.
Yes.
I was in accounting class. The teacher that I had was very, very good and very thought-provoking and tough. I remember my teacher, Miss Compston, I learned invaluable things from her, and then when they brought in Junior Achievements, it brought into perspective, in the real world, this is how it means to live. This is how you balance your checkbook. This is what it means to invest, and kind of like the opportunity cost of all these different things. So that was one life-altering moment for me, because it empowered me to be financially savvy, and actually I knew some things, right? And those same programs exist. Junior Achievements, they will present here to African Leadership Group, and my goal is to work on bringing some of these programs to the African Leadership Group and presenting it to the youth, to the children, and empowering them, and hopefully they will have the same, clarity, that moment that I had myself, but simply empowering them to be able to do better than you and I, better than their parents, better than they're their elders. Simple as that. So, Junior Achievements is one of them, and there's a few other programs that that are online that you could sign up for that are free, and one of them, I forget the full name of it. It's a pretty long name, but I'll think of the name here. But there are programs out there that you can present to your children, and they can do it online. But my goal here, going forward, working with you and Papa and the team here, is to be your finance guru, your money coach, and just share general information and empower the youth and the adults as well to have a successful financial plan future, and have those discussions with you guys and answer questions. So
great. I did say that was my last question, but is there anything that I haven't asked that you would like the people to know about?
No, I think you asked great questions. Everything that I shared with you, they're general information, again, educational, and each person is unique. We're not all the same. We're not all in the same circumstances. Yeah. So really, thinking of your own self, where you're at, and what are your priorities, it's going to be important. And then from there, building those layers of financial planning, and again, start off with the basics, which is having a good foundation to be able to build onto. So I don't have anything else. I know that I'm gonna be more present with ALG. I was here a few different times before, but simply just to support and make myself available if there's any volunteer opportunities. But in this case, my goal is to be present and be a person that can be reached out to for the community, and a resource for personal wealth management, personal financial management. So
thank you. And thank you all for joining us once again for another episode of the ALG Weekly. This was a resourceful episode, as we know, and as we've been telling you. We have within our community incredible resources. We have within our community people who are expressing in their fields and who are ready to offer their expertise and provide resources to the community. That's what we do here at the African Leadership Group, and we do it with the help of people like you who are willing to provide us with their expertise. And yes, so this is Monday the 30th, and if you've been following us, we always talked about Leadership Africa, which is a new upcoming program that the African Leadership Group has put together. Today is the final day for the applications. If you have not applied, you can head over to our website, usalg.org, and turn in your application today before 5 p.m. And if you do that, we'll see you soon.
I will say one thing. Tomorrow is Tuesday. It's Giving Tuesday. So find the nonprofits that you care about and donate. Every little bit helps. And again, it's a good cause for the community. And who I believe in is the African Leadership Group, among maybe one or two other nonprofits. And I believe in giving, and it feels good to give.
Yes.
And if you can give to the African Leadership Group or the companies that you care about.
Yes, thank you. So Giving Tuesday starts tomorrow. I mean, it's already been started, but the rally will start tomorrow, and it will go on all the way till Tuesday, December 8th. Will be the final day of Colorado Gives, and that will be the Colorado Gives Day. We are planning on streaming live on Tuesday, December 8th, to tell you about what ALG has done for over the past year, how we've really put our resources together to overcome the challenges that have been put in front of us by the coronavirus. But we also will talk about what we are planning for the community and resources that we will be putting together for the upcoming year, 2021. But yeah, we'll see you again on Monday, December 7th, for another episode of ALG Weekly. Thank you for joining us, and have a great day.
Awesome. Thanks for having me, Amadou.
Thank you.
Yeah, you're the man. I'll get a bump from you.
We get